Good evening, everybody. Nice, pleasant fall evening here. It's still relatively warm for Pittsburgh weather. All right, we needed to see today, after what appeared to be a double bottom, and this is just a very good screen to be illustrating the fact that this wasn't a reversal signal, so you have to be a little bit suspicious that it's going to fizzle out when it hits the first resistance level. Whereas this was a reversal signal, your left-right combo. So this has double meaning here because that is a signal, a strong signal, and you can see that it's a double bottom. This makes it that much more relevant that an uptrend was starting. It was indecisive, but the final decisive factor was they never closed back below the T-line. It was indecisive because the NASDAQ just wasn't going to get started. If we can make this a little bit bigger. Opened positive, sold off. Did nothing. Still caught below this downtrend until Friday when it did kind of a left-right combo. But all it was basically telling us was they weren't selling it off. They were actually buying. And that becomes more relevant because of the left-right combo. So now we can see we're in an uptrend based upon that signal. And notice what the what they did today with it. Brought it right back down into the T-line area and took it right back up. No chart I can see. Raja, are you on chart sharing up at the very top versus slides? Let's see, are they already? Yeah, that's the crude oil chart. December contract just kind of flattened out, trading right here around the $85 level. However, that has still not deterred some of our recommendations on the oil stocks. Well, Perry, what's your problem? We can get you fixed up. Okay, so look at wave one, wave two, wave three. Now, the waves are obvious, but what even becomes more obvious is the fact that they brought it right back down to the 200 in the T-line. So that just becomes that additional visual evidence that they're not selling it off. Get ready for this trajectory. We saw that here, saw the same thing over here on EOG, and then the confirmation was the rest of them. ExxonMobil couldn't close below the T-line. ConocoPhillips couldn't close below the T-line. Whoops. Schlumberger. Just this right here, and the fact that you're seeing indecisive trading, this gives you the evidence to get ready for that next move the next wave to the upside. This is the type of thing that I'll kind of throw in a promo here that we're going to be going through on Saturday of what strategy do we use as far as options right here, or what strategy do we use for options up here. And that's where we're going to be using the combination of calls and then adding maybe spreads to that trade. So anyways, the bullish confirmation is the fact that when all the stocks, or a majority of the stocks in that sector are doing the same thing, you've got pretty good evidence that they're buying across the board, that they're buying the whole sector. So the benefit of that is, if we know they're buying the whole sector, we basically want to be finding the strongest stocks in that sector that's going to start wave 3, like we saw in EOG, which was a bullish flutter kicker signal, very strong beginning of an uptrend, and of NOVE. Look at your wedge, look at your slow curve, and then look at your doji sandwich breakout. So you add this all together, you're just giving yourself that much more visual evidence that you're in the right place at the right time. And what I put into the YouTube tonight was the fact that the benefit of trading a pattern versus just an uptrending stock in an uptrending market is that usually your trajectory on a pattern is going to be much more excessive or much more profitable than just a slow uptrending stock in an uptrending market. So we're also watching the lithium mining because they're starting back up. We'll still be a buyer of LTHM if they open this positive and start trading positive as a doji sandwich going through the 50. There's a few more that are setting up the same way, that you could be buying on strength. A positive open here would give you a doji sandwich breakout. So keep an eye on that sector. Another sector is the steel stocks. You can see how Steel Dynamics has broken out. I think Schnitzer was running behind here. Yeah, that was a bad one. But I think U.S. Steel is setting up nicely also. So the benefit we have is not only identifying the patterns, but which sectors are having a bunch of patterns setting up, which also gives you the clear indication that they're buying that sector across the board. So let's take a gander at a few that we were recommending. IMVT, you can see it setting up. And not only can you see it setting up as far as the slow curve, but look at the nature of the pullback, just indecisive. So right about here, or even here, you might say, going to close it out because we don't know whether it's going to go this way, or this way. Let's close it out because we can always buy it back when we see that the pattern is setting up. And the bigger the signal, the more compelling there's been a change of investor sentiment. So something like this, which has a big breakout move, puts you in a situation where at least you're identifying that there's been a huge change of investor sentiment, that it's probably going to create some greater activity. And this little one, Mullen, had that same scenario the other day, even though it wasn't a signal. I told you there was new activity coming into this stock after this slow, steady downtrend below the T-line. What became more compelling was today's gap up after kind of a pullback to the T-line, then gap up. I'd still be a buyer of this one. Again, there's something happening. We may not know what it is, but we know it's happening based upon the evidence that we're seeing in the new breakout move. And you've got some shorts that are still working in spite of the market moving up pretty strong. When you can identify the bearish J-hook pattern, today we were anticipating this could produce a doji sandwich. Didn't quite do it, but I'd still be shorting this one on weakness because of the bearish J-hook pattern. TPIC has never gotten up above the T-line. We've got this one in stock, not the options. And it's very simple. You just stay short until you see that major reversal. That was also very amplified in the in Carvana. If I can make this smaller. You've probably seen me illustrate this chart quite a few times where this actually came from, came up here from 370, and every time it came and hit the resistance level, it would sell off. Came up, still selling off. So this little signal right here, where they gapped it back down and started trading it back below the T-line, this is where you use your 2+2 analysis. Which direction has this stock been going overall? It's been heading down. So anytime they start bringing it back below the T-line, that's going to tell you the sellers are still there. So this is where you can make huge profits, knowing the direction. And again, the assessment was it's heading down. Every time they take it up, they will smack it back down. There's your little kind of trend kicker signal below the T-line. That was just good indication they were still taking it lower. And then because we had spreads right in here with only a day or two left before expiration, I think we bought the spreads at $1.60 and sold them out for $4.40. Had I waited one more day, we would have gotten $5 for it. But the risk reward wasn't worth it at that point to make an extra 60 cents. But we did have the wherewithal to start buying puts again because of the gap down. So those puts that we bought at, I think it was $1.96, obviously are now down in the $6 area over the last few days. So I'm pointing this out because this is the type of thing we're going to analyze on Saturday is what strategy, when do you put on spreads, when do you buy calls or puts outright. And the other confirmations are the biggies. Apple is moving up. When you start seeing the biggies starting to pick up a little bit of steam, there's Amazon. And notice also what Amazon did today. What makes this a little bit more bullish? The fact that it came right down to the T-line and then came back up again. That's another illustration of that the T-line acts like a natural support and resistance level of human nature. NVIDIA has a little mild resistance level. Kind of, whoops. Right down through this area. I'll see that get up through that area before going after it aggressively. Okay, we did Amazon. And Netflix. Netflix is another example of when you have a breakout. Make this bigger. There's your trend kicker breakout through the obvious resistance level. Whoops. What do we expect here? A 45-degree. Now, another thing we'll go through is it's going to be a 45-degree. Don't know how slow or steady it's going to be. Instead of buying calls, this is probably more apt to be a call spread setup. So the breakouts are exactly what we're looking for. You can break out a strong price move. What type of price move? There's what it was doing before. So what does a fry pan bottom basically tell us? Consolidation after a strong price move, but now investor sentiment is building up ever since our little Morningstar scoop type situation. And now we've broken out through a level that we know is a breakout level. And as a candlestick investor, we know that we want to be buying the signals in the oversold area. We want to be buying the pattern breakouts, usually when the stochastics are in the overbought area. So you've got that. Another little kind of fry pan bottom, little bobble breakout on CPRX. Another one you could be buying. And the breakout, I know a couple of you in here have been trading EH or AEHR. Look where it broke out. Kind of your rounding bottom and your breakout level right here. When they gapped up through that level, what did that tell you? There's now good, new, strong evidence or evidence that the bulls are definitely in control. What you're looking for, and this one is a very clear illustration of that, is you could be buying down in here with the expectation that it's going to come back up to this level. Now, if that's only a 6% move to take 4 or 5 weeks, 3 weeks, whatever to get there, that may not be worth putting your money in as being a profitable trade. So then your next target is right here at the breakout level. Because what do we know about a fry pan bottom breakout? That usually instigates a very strong price move. So this becomes the area, whether you are watching it or identifying it after the breakout. That's not a situation where you're saying, oh, we're in the overbought area. That's a situation to say, oh, we're breaking out of a pattern. And what do we expect coming out of a fry pan bottom? A very strong price move. CVLG, kind of the same scenario. Where did it break out? Right there. Another one that has prospects, of going much higher. That wouldn't be the trajectory. What do we got going on here? Same scenario. Here's your fry pan bottom breakout. What would we expect from here? Another move like this. Adobe. You can see that setting up. Where would you think at least your first target is right now? Probably the 50-day moving average, which in a few days would be right here, which would correspond with this area right here. So you could be buying this one, but if I was looking to buy this one, I might say, all right, we know this is probably your projected target. Let's minimize our risk and then maybe buy a 325, 335 spread, something along that line. where if it moves to that level, our profit margin or our profitability is going to be very good. And if it doesn't get there, we've got a spread on, which means we have much less money involved in the trade. Okay, we've also got things like Spotify that's just now breaking out of this downtrend. ATUS. Let's make this bigger. This is what you call your little stutter step. Notice you had a nice morning star signal, came up, pulled back indecisively, doing that little stutter step. Now it's starting back up. So you got your J-hook pattern set up. Becomes a very high probability trade setup that you're buying, your quick consolidation. But again, notice the consolidation is not decisive selling. Doji indecisive, hammer indecisive, doji indecisive, and now they take it back up. That's where you can identify being in the right trade at the right time with at least an expected price move. So maybe up here's your first target, there's your second target, but at least you know you're heading in the right direction. Anytime you see a breakout or a potential breakout, you can see the 34 is kind of a resistance level. So what gives us the impression that this might be breaking out? Look what started it. There's your doji sandwich, and what do we know about a doji sandwich? It's usually foretells a strong uptrend or more of an uptrend. There's your classic pattern. Your fry pan bottom, your J-hook pattern. There's your fry pan bottom, your scoop type J-hook pattern, and notice the morning star signal right smack dab on the T-line. What would we expect from this move? Wave 1, wave 3, bringing you up into this range. Let's see. DRVN. There's your J-hook pattern. And what's relevant about the J-hook pattern? It's supported right here on the 50 and the T-line. Starting back up, what's our expectations? Wave 1, wave 3 should bring us up here with at least moving us up here to fill the gap. Or visualizing what everybody else was expecting to be a target. What is... Geez. So there's your bobble breakout, J-hook, best friend signal on Kraft Heinz. I got this chart so I could follow what you are saying. You got what chart? You got the Heinz chart? All right. So there's your bobble breakout. This one we were looking at, but if this had opened lower today, you could have expected a bearish doji sandwich. The fact that it gapped up and went the opposite direction obviously didn't have you going into the bearish doji sandwich. However, now we can identify what it is doing. Your J-hook pattern look for the next move to be heading for the 200-day moving average. Not a very big percentage move, but it's a high probability move, which means maybe you buy a 37 and sell a 38 spread. But if it got to that level, that instead of making 3% on that trade, you might be making 60% based upon the an option spread. IPG, another J-hook pattern, with the evidence being that it's bounced straight up off the 50 and the T-line. Where's the next likely target? 200. And what do we expect here? If it opens positive, what type of pattern do we have? A bobble breakout. What do we know about a bobble breakout? Very high probability, high profit price moves. Oops, did we do the oils? I guess we did. Schlumberger, J-hook, Halliburton, J-hook, ExxonMobil, J-hook. So that whole sector is being bought. DXCM, setting up. Put your, oh, I don't know, that's not quite a harami, but it's giving you that impression that they're bouncing up off the 200. Valero, all right, I haven't even checked Valero. All right. Watch to see what that does. ALV, J-hook type pattern, and why is this relevant? Look at your bullish flutter kicker signal. Probably telling you there's a lot more upside. There's your J-hook pattern on VVV. Oh, that's Valvoline. All right. Another prospect of heading to the 200. ELV, guess the V's are. Oh, this is just an example of, look at your, you can see it. I mean, this is why I say observe the obvious, especially when you've got the T-line as your support level. When it broke out, there was your bullish flutter kicker signal, breakout, good strong price move. And this is putting this chart up. Again, illustrate, there's your bobble breakout. But this is why you want to know what the nature of each signal is. Indecisive, 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 boom. That consolidation was very indecisive. The uptrend remains in progress. That's why using the T-line is very important. So still good bullish trades out there. However, they're not across the board. They're mostly in specific sectors. That's why we want to keep an eye on the lithium mining stocks and the steel stocks, because they seem to be picking up. And once again, you're better off being in a sector where they're being bought across the board versus just a good bullish chart in a sector or a area that's the only one moving. You improve your probabilities of being in the right trades when that whole sector is moving. Bearish kicker signal on Las Vegas Sands. Now, it's not going anywhere. However, look where the bearish kicker signal is. Kind of right down here, that if they open this lower, it's breaking this whole sideways trend. That becomes a good short. NVCR was a good example of that. where you could kind of draw this trend right down through this area, or at this last support level. Notice what you had here, a little trend kicker to the downside. What's that kind of demonstrate? That this area that had been acting as support, now you might have a strong free fall from this level. Z-Lab, same scenario. Kind of rolling over, and then they gapped it down through any of the last support area. What's that imply? Another wave to the downside. ALVR. Where are all these things come from? You can see you've got kind of a, whoops. Kind of a support level right here. But what knocked through that support level? There's your bearish doji sandwich, implying you've got more downside. What do I got to do here? There's your first target. If it breaks through there, lots of downside. That's your slow curve breakdown. These are the type of things you want to be looking for. Tell you, when they came up and hit the T-line, they failed. Came up, hit the T-line, failed again. And when they failed this time, where were they failing? At a level that everybody else was watching. And just told you, yep, it's not supporting anymore. That's where you're going to see a lot of people start bailing out. So where did this one fail? Bearish engulfing, right smack dab at the 50. If this opens lower, where's your first likely target? The bottom of the trend channel, and then see what it does from there. Bearish best friend. Now you got kind of a bearish double doji sandwich. What's that imply? Still more downside. So I'm pointing these out because there are as many good short positions right now in an uptrending market. You can see the dumpling top. And what activated the dumpling top? This gap down. That's still heading lower. DX. What's this implying? Bearish J-hook pattern. This one can be shorted on weakness tomorrow. And STX. Wave 1, wave 2. How did wave 3 start? With a gap down, kind of your abandoned baby, failure right here, closed below the T-line, and then traded below what would be perceived as the last support level. When it opened lower, what was that implying? That now wave 3 is in progress. Whoops. Let's see, this must have closed lower after hours because it's right here at this level. So if this started trading back below the 114 area, pretty much telling you a bearish J-hook pattern's breaking any of the support. Perry, these unfortunately are from CQG, and they run about $1,400 a month, mostly because I trade commodities during the day, so I use these live charts, but they are fast. I mean, I can go from chart to chart very quickly for these sessions. Now, oops, I think you also have metastock. So you probably want to have charts that are giving you a dual function. Now, you probably have charts at whatever trading firm you're using. And you can set them up the same way, except they probably won't have scanning capabilities. So the two that I recommend for scanning is Metastock and TC2000. TC2000 has very good charts for scanning U.S. stocks. That's about it. Whereas Metastock has good charts. They're a little bit more where you have to set them up yourself, but we got our software over there on their charts where if you see something, let's pick out something easier. If you see something like this, or this sets up, it'll identify this for you as a Morningstar signal. And this as a bearish harami, or this is your bearish best friend. So it identifies the signals and patterns for you. Now those are reasonable. They're like $47 a month or $96 a month. Okay, so when I see something like this, I probably, well, I have to think about this. If it opens lower tomorrow, what do I anticipate? Possibly another wave like this, or at least a wave like this, which means I could be buying some puts. Or if the volume is big enough and it has another big move to the downside, which confirms we're in the next wave down, now I'll add spreads to those puts. I'm trying to pick out another one. Kind of the same scenario on this one. We know this is when it broke this level, we're in a downtrend, and now we know we're in a wave 1, wave 2, wave 3, wave 1, wave 2, wave 3. So another one where you might buy puts, and then next day or so, if it continues lower, you add spreads to it. So the one I like to keep showing is this one, where we have been buying puts and put spreads on this one constantly, just making huge amounts of money. Again, not anything more than identifying strong sell signals and a close below the T line. Okay. Whoops. I was going to check gold. And gold's not moving anywhere. We did crude oil. Looks like the dollar is leveling out. So even if you're trading futures, you can go through, there's only about 15 or 20 things that you can really trade. The currencies, the grains, the metals, gold, silver. Then they call the softs, which is cotton, coffee. Darn, I haven't traded that sector. And then you've got the meats, your live cattle, lean hogs, feeder cattle. And you can, oh, Raymond, there you are. Yes, then you can trade the S&P. The E-minis. Natural gas is haven't traded that as much. Which I should. Sometimes it's just how much liquidity is there in some of them. Some, I think you've got orange juice, but orange juice has very low volume in it, so it's hard to trade. Soybeans. Right now, if you look at the soybean chart, you'd be asking which way is this going right now? Nowhere. So I'd pass that one up. But I'd immediately go to wheat. Wheat, you could possibly, well, you wouldn't be shorting this right now because you're now in the oversold area and it's trading relatively flat. So what you want to see is something that has a definite reversal to it, and you might be trading that for the next 4 weeks. You might not be trading anything else for a while because they're all trading flat. Okay, I guess that's about all I've got for tonight. Are there any general questions on candlesticks? Hold on to your individual ones for a minute. So I'll tell Jim to do the double line. The problem with Starbucks is it's an institutional trader now, and you can see that it's just not a very good trending stock. Yes, that is a steady Eddy. So this is what you're looking for, is your strong buy signal. And then your next criteria is you can stay long until you see a sell signal and a close below the T line. Now right there would have been a decision to make. And there's a couple strategies you might use. One, you close it out, and then if it trades back positive, but now that's going the wrong way. Maybe you close out half the position. But now you have a criteria. What does this need to do? If you stayed in any of it, what does it need to do the next day? It needs to trade positive. Why would you give it a little bit benefit of the doubt? Because it's been a strong, steady, uptrending stock that stayed above the T line for a long time. If it's done that dramatically, give it one more day. See if this was just a bad hair day and they take it back up. I would be doing the same strategy up here. If it closed just below the T line after this strong uptrend, I'd use the same strategy. Would have to open positive and trade positive to stay in it. Not now. Kath, you're in the overbought area. It's just moved up from 36 to 46. This is one where you go back and say, where should I have been buying this? Well, there was my best friend gap up off the 200. So if I did my scans and found this best friend off the 200, which is a little bit more relevant, I mean, even though it's off the 200, which is good, gapped up through the T line, what else can we identify? It supported the 200 before and started up. So that's where I'd go back and say, all right, I don't want to be buying now, but this is a good, strong chart. What created this good, strong chart? That's why the best friend signal is number one on the list. On STX, would a short be okay? Clarence, is that a trick question? Why would you be shorting this stock? Ah, aha. Did I type it wrong? No, you did it wrong. Okay. This is so the question is, the bank won't allow puts or spreads. This account is like an IRA type vehicle. Yes, so if that's your only option is to short the stock, if they let you do that in your IRA account, that would be the right strategy. Now, obviously, if you've got accounts where they won't let you short, you're just going to have to say, "Yep, I can't buy it." But there are things where, let's say you wanted to short some gold stocks. Well, you couldn't short the gold stocks. You might be able to go to the short ETF and buy the short fund, so that if gold stocks are going down, at least you're making money by buying the short fund. It was a trick. Okay. Is CNC a best friend signal? No. The best friend is a very obvious gap up. This is just a bullish Morningstar type signal. See if I can find one. Oh, I think the left-right combo. Oh, is it? Okay, is that it, Harry? All right, thank you. JQ, yeah, it's some IRAs don't want you to short stock, but they'll allow you to buy puts. So I guess it's how each one is set up. Option spreads are, all right. Yeah, so that's right. But it's, I usually just try to keep a little bit longer term trades, stock trades, and the retirement accounts. Oh, is that puts or protective puts or writing calls? Okay. Okay. I guess with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Okay. Car had a good breakout today. This one you could be buying on positive trading. AGYS, that's a nice little slow curve. You could be buying this one with the expectation at least your first target is at the top of the channel. Costco, you could be buying this one. Just watch to see what happens once it gets to the 50. And Micron, this one you could buy on positive trading tomorrow, giving you a bullish doji sandwich breakout. AMD is kind of a laggard in that sector. Abercrombie, you could be buying this one. Little J-hook pattern. You can see the basing. You can see your left-right combo. You could be buying that one. That's not a bad-looking chart. Genco, stay short, except you've gapped down. Remember what the common sense perspective from the Japanese rice traders is. Where do most people sell? They panic sell at the bottom. Now you've got a hammer signal. So that gap down in the oversold area would be a warning to say if I was short, I'd be ready to start taking profits on signs of strength. DraftKings, all you can do right now is stay short if you're short, and with the safety stop just above the T line. Myra, that one, I wouldn't be long. I wouldn't be short. Obviously, wouldn't be long until they show a little bit more strength. You got the slow curve kind of bobblish breakout. You can buy this one on strength. Whoops. All you can do on this one, John, is just stay long, as long as it stays above the T line, but I'd keep a safety stop below the T line. You're in the overbought area. It's not going up with any great resiliency, so keep your safety stop in place. United, stay long. If I was long, I'd have a safety stop at today's open. QCOM. Oh, you could be buying this one. Oh, Shaw. You could buy this one on positive trading. Just watch what happens once it gets to the 34, because that kind of coincides with your downtrend. ENPH. Nothing here yet. I wouldn't be short. It's kind of a McMuffin. You would definitely need to see positive trading. So if it did open positive, yeah, at least you know you have a good day trade at least, or at least be in the right direction. Oh, they've got earnings on Tuesday. Carry, I guess if it opened positive tomorrow and traded positive and then didn't finish up strong, I'd probably come right back out of it, which I would do on any stock that wasn't finishing up strong. Simple, you stay long on this one until you see a sell signal. Whoops. WFRD. Weatherford, slow, steady uptrend. which means just watch now that you're at the top of the channel. Stay long on this one. Oh, more than 25? All right, thank you, Bill. Baba, another one where if you're short, remember where they sell, they panic sell at the bottom. If I was short, I'd be ready to start taking profits if they showed some strength from here. If you want to go short, it needs to open lower and trade lower, showing you they aren't buying yet. That's not a belt hold, that's your hammer signal, which is a very strong bullish signal. So you could be buying this one on positive trading. You just have to be aware that the magnitude of return on this one is very, very small. You can see that there's not a big percentage move. And so you'd only be going up here, which would be, let's see, 2 points. Yeah, only about 8%. But that is a hammer signal, usually indicating a reversal, especially in the oversold area. Etsy, you can see what this one's doing, just moving sideways. Probably wouldn't be long or short. Winnebago, excuse me, kind of the same scenario. Nothing real exciting. You do have an inverted hammer. So if you're interested in buying this, or if you bought this, it needs to get through these moving averages and it needs to get out of this trading range. That's a nice fry pan bottom breakout. Just make sure your volume is hefty on this price stock. MMI, setting up for a bobble breakout. I wouldn't be buying it yet. I'd probably be buying it once it comes up through the 200 or through the 50. Corn, just kind of flat. It's not popping. Oh, where's he getting this stuff? All right, so there's your gap down in the oversold area. Trying to do a belt hold. If I was short, if it opened positive tomorrow, I'd probably cover my short position. Wouldn't be going long. Just wouldn't be, just be taking profits on the short. Roblex is having a hard time getting out of its own way here. Just trading flat after that gap up. So on this day, by this time, if I was long, I would have closed it out and then wouldn't pay attention to it until it comes up through the 200. And DBA, kind of the same, or not the same scenario. That's just kind of a nothing chart. If you happen to be short, you could stay short, but that would be the only thing I'd be doing on this one. And obviously it needs to break that level to show more strength to the downside. Dollar Tree, that one you could be buying on strength. Watch to see what happens at the 200. And Caesars, that's showing good strength. It can also be bought if it comes up through the 50. Again, kind of a downtrend here that it needs to break. AMAT was doing the doji sandwich confirmation. So if you're buying this one, it needs to break this downtrend, which means once it gets through the 34, then you have to watch to see what happens at the 50. Peloton is still drifting. If you're short, just stay short. And Tesla opened down at the previous day's open today, but then came back up. Right now, I probably wouldn't be long or short Tesla. It just doesn't have any direction. AUPH, still kind of a nothing chart. Unisys, same thing. Wouldn't be doing anything with this until they get up through the 50. And same scenario. This is kind of a nothing chart. You picked 3 good nothing ones, JB. Cisco, bullish engulfing, stay long, but obviously you're at a potential resistance level. Need to see this get through that level tomorrow. We did Starbucks. Bearish kicker signal. It's usually not a good trader because it's relatively flat. But if it did open lower tomorrow and trade lower, breaking this level, at least you got some potential downside. The little green line is the 3 EMA, the 3T line. It works in conjunction with the T line. And it acts like a confirming indicator that when you see a sell signal in the 3T line coming down through the T line, just additional confirmation that new direction is in progress. IQ. Another one where Tim, to stay short, it has to open lower. Remember, they gapped it down in the oversold area today and then came back up through the open. Remember, when they gap down and oversold, start looking for buying. That would be, well, Kath, we won't know that until going into the close if they are announcing after the close tomorrow. That's where the big money will start making its decisions. RES, all you can do is stay long on this J hook. Let's see, Goog. Nothing wildly exciting here. You're in an uptrend, but just kind of an chart. This, what we're looking at, PNE. Nothing there. That's kind of a nothing chart. Let's see, is that the dollar? Whoops. That is the dollar fund. That's just sideways. Would you consider selling puts or credit spreads in this seasonal bullish market? Boy, you could, but that's going to be a function, Greg, to a function of how much time. I mean, I'm usually doing credit spreads on a very short time frame, meaning today, if I was doing credit spreads, it would be for expiration this Friday. Wheat is in a slow downtrend, but you're in the oversold area. I probably wouldn't be shorting wheat unless it comes down through this level, telling us that support area is not acting as support, and that would be a little bit, what do I say, defensive, because you're already in the oversold area. Yeah, I haven't seen a whole lot recently. Well, you know, I haven't even looked at lean hogs. That one's been a good one ever since the bullish harami gap up. But now you've got a bearish harami telling you the buying has stopped. Where? At about the same level it stopped before. So what do we might want to watch now? Well, if they start selling it off, might be in a trend channel. Oh, Valero's in the morning. All right. Cleveland Cliffs. Yeah, you can see what happened. First of all, you had kind of a resistance probably at the 50. And then today, there's your bearish harami telling you the buying has stopped. I would have closed it out today if I was long. But I'd be ready to buy it if it came back up through this level in the next couple of days. Well, yes. I would rather be a day late than try to second guess. I would rather see it open here and then know that my probabilities were that it was heading down. So that's exactly right. That's why I usually say, all right, if I haven't bought today, I'm going to just be a little bit more conservative. And now, had the market been in a different direction, let's say the market was heading lower, it might have put on a half a put position there instead of waiting. But with the market heading up, you'd be basically shorting a stock that had a good sell signal, but the market is heading in the opposite direction. Would put a November 4th spread on Starbucks at 85.80. Oh, that's got to be pretty expensive for $1.90. And 85.80 for only $1.90. I guess that would be viable. Oh, you used that word already. But if it came down here, your $1.90 would go to $5. That's right. I would short bread and popcorn. All right, so you still want to make sure the markets are heading up, which it looks like they're doing. However, remember what happens when we get to a resistance level. They go through, they'll come back and test it sometimes, and sometimes most of the time, to see if the resistance level is now going to act as support. Because of the different sectors. You've got the high-tech sectors over in the NASDAQ, which means if interest rates are going up, the tech stocks are going to have a little bit more trouble moving. I would imagine right now it's the solid stocks that are moving, the blue chips that are being bought for safety. Okay. And gold doesn't seem to know what it wants to do. Just kind of hovering in here. So, and we've still got that somewhat attitude of the whole market that there hasn't been a lot of exuberance to the bullish side, and that's why we're seeing so many stocks still producing good downtrends. Just kind of a mixed bag out there. The Russell, yeah, Russell really isn't going anywhere. I think everybody's still kind of waiting and seeing what the political arena will look like in the next couple of weeks. Sometimes that's true, Kath, but it's also a function of the weather. I'm sure wheat moves around right now based upon the situation in the Ukraine. Sure, that's why it was moving like this. So anyways, don't have to, once again, overanalyze what's going on in any particular commodity. The chart will tell us what's going on. All right, everybody. We'll see AutoZone. That's a good little breakout, especially right where the kind of the pattern pretty much started. All right, we'll see everybody bright and early tomorrow morning. Let's see, good stuff for you. This marathon, all right. Yep, they're all in that same pattern, and that J-hook pattern is relevant because we know if it breaks out through this level, that's a good breakout area based upon the J-hook pattern. All right, yep, go pop some popcorn. All right, we'll see everybody bright and early tomorrow.